Renting a home is not always a poor financial decision, despite the common perception that it is. In today's video, I wanted to break down the math to help you understand if it's a better decision for you to rent right now or to buy a home. But first, I want to break down why we often think that owning a home is the best way to build generational wealth. So in 1976, the median price of a home was $44,200, which is probably pretty frustrating to hear because the median home price of a home today is $446,000. But that would mean that if you bought the average home in 1976 and it appreciated into the value of the average home today, you'd have gotten over a 900% return on that investment. And when you annualize that, that comes out to 4.8% per year. Later in the video, I'll actually talk about why that's a bit of a misrepresentation of ROI. But looking at those numbers, you'd initially think that's a pretty solid return on investment. And so I think most people see those numbers and they feel like, well, renting is throwing money away. At least in this scenario, I need a place to live. I'm getting a return on my investment. But I think that that fails to address the total cost of ownership. And what I mean by that is the total cost to rent versus the total cost to buy a home. Now, with renting, it's pretty straightforward. The total cost of ownership is just the rent that you're spending every single month. So if your rent is $2,000 a month, then your total cost of ownership is basically $2,000 a month. With owning a home, it's a little bit more complicated. You have your mortgage, which actually can be broken out into two different costs. One is just the interest that you're paying to the bank every single month. And the other one is the opportunity cost had you just chosen to invest your down payment instead of using it for a home. The other areas are home insurance, property taxes, as well as maintenance and repairs. So let's break all of these down a little bit further. That way you can get a better picture of the cost of ownership of a home. Let's assume that you're buying a $500,000 home, and we'll run through each of those categories of costs. So to start, we're gonna talk about your mortgage. We'll start by talking about the cost of actually getting into the house in the first place. That's gonna be your down payment combined with your closing costs. Now, on average, closing costs are anywhere between 3 to 5%. So on this $500,000 home, we'll say that you spent on the lower side $15,000 in closing costs, and we'll say that your down payment was 20%, so $100,000. That would mean that the total cost of actually getting into that house would be $115,000. As I mentioned earlier, buying a home, owning a home, you're gonna get about a 4.8% per year appreciation. Now you could also take that $115,000 and you could invest it into the stock market. And if you invested it into the S&P 500, you could expect an average return of about 10.6% per year. That's a difference of about 5.8% every single year, which on a $115,000 investment, that would be $6,670 per year. This is an opportunity cost. The other cost to the mortgage is what you're spending on interest every single month. Now, right now, interest rates are hovering at about 6%. And if you put $100,000 down, that means that your loan would be $400,000. So that would require you to spend $24,000 per year just on interest on your mortgage, not building equity or anything like that. That's just money that you're handing over to the bank every single year. Now I'll move over to maintenance and repairs. Typically, you would budget about 1% of the home's value for maintenance and repair costs every single year. So on a $500,000 home, that means that you would be spending $5,000 per year on maintenance and repairs. Now the next two categories are gonna fluctuate a lot, taxes and insurance. This is gonna be dependent on you as a person, where you're living. I mean, literally city to city, you're gonna have potentially very different property tax rates and insurance rates. That being said, the national average of property taxes is 1.1%. So we'll use that just as a general average, which on this $500,000 home means that you would spend $5,500 a year on property taxes. And like I said, insurance is really gonna vary. I mean, even in the same exact town, you could see pretty big swings in the cost of insurance. I mean, if you bought a home in Florida, for example, your insurance costs might be $11,000 per year, whereas in a place like Vermont, that might be $750 per year. We'll use the national average of what people are spending on their home insurance, which is $2,000 per year. And so we factor all of that in together in order to own this $500,000 home. Every single year, you need to spend $43,170. That's 8.6% of the home's value. That 8.6% is actually a really helpful number that you can start to use on any home that you want to evaluate if it's better to rent or buy. Essentially, what you would do is you would take any home that you're looking at and you would look at the home price multiply it by 8.6%, and that's going to give you a rough estimate of the total cost of ownership on an annual basis for that home. You can basically just divide that by 12, and then you'll get a snapshot into the monthly cost of owning that home, which you can then use to compare of what it would cost to actually rent that home out instead. Now, you're not going to be able to literally say, hey, how much does this exact home that I want to buy cost to rent out? But what you could do instead is you can look up similar comps. So, for example, I pulled up this home that cost $529,000. If we use the 8.6% rule, then it would be $45,494 per year to own this home, which on a monthly basis is $3,791. So if I can find this exact home and pay less in rent, that actually means that the total cost of ownership is less for me to rent than it would be to own this home. Now, this is a similar comp that I found. It's in the same exact neighborhood, pretty much the same square footage, same size, same number of bedrooms and bathrooms. And it looks like this home is available to rent for $3,500 per month. And so in this case, if you were evaluating living in this neighborhood, it actually probably would be a smarter financial decision for you to just rent instead of buying a home. But first, I want to talk about the main argument that people make when it comes to buying over renting a home. And they'll just say, hey, no matter what, it's always a better idea to buy because maybe it's more expensive right now, but your rent will go up, 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 and up. And while it is true that rent goes up 3 to 5% per year on average, and that your principal and your interest are fixed, meaning that your mortgage payment shouldn't be changing month over month, owning a home itself is not a fixed cost. Your home insurance goes up on average 5% per year, and lately it's been even higher than that. Some people are seeing their home insurance rates go up 15 to 25% over the course of a year. Your taxes will go up on average 3% per year. And due to inflation, your maintenance and repair costs are gonna go up as well because labor and material costs are gonna go up on average 3% per year. And so altogether, the cost of owning a home also goes up 3 to 5% per year. And so really it's a wash. I also wanna go back to that point that I was making before, which is the 900% gains that someone got on that original $44,000 home. If you bought a home for $44,000, and you sold it for $446,000, you're not making $402,000. You technically could profit $402,000, but there's two costs associated with selling that home that you're not factoring into your return on investment. So the first one is just that if you don't roll that money into another property, you have to pay capital gains on all of that money. At a 20% tax rate, that could chop your profit down to $321,000. That's a really big chunk of money. That would drop your return to 730%, and mean that on average, you'd get 4.3% annual returns. Now, again, if you would put 20% down on that $44,000 home, so $8,800, and you would instead put that into the stock market, you would have been able to turn that into $1.3 million. And this doesn't include the principal that you would be putting into the home as well. Because again, when we're looking at the total cost of ownership, we're not actually factoring in the amount of money that you're spending on principal. So technically you could be investing that principal as well. And so let's say for 30 years, you, on top of that $8,800 in initial payment, invested $100 per month. At the end of the 30 years, you'd have $400,000. And let's say at that point, similar to having a paid off mortgage, you stopped investing. Well, after 50 years, you'd have $2.9 million. Additionally, you could use tax advantage accounts, meaning that when you actually go to access that $2.9 million, you don't have to pay any sort of capital gains tax. You don't have to pay any sort of taxes to withdraw the money at all, assuming that you use something like a Roth IRA or a 401k. Now, this math is helpful, but I think there are other important considerations to take into account when you're considering whether or not you want to rent or buy. The first one is just that humans are impulsive and they tend to be a bit irrational. For example, I know that maybe I shouldn't be buying a $7 latte, but I might decide to buy it anyways. Just because someone had $100,000 that they could use as a down payment doesn't mean that they're actually going to invest that money if they rent instead. The approach to rent and invest actually takes a lot of financial discipline, and a lot of Americans are living paycheck to paycheck, which is probably an indication that we don't always have the greatest financial discipline. Now, in comparison, owning a home basically forces you to save and invest your money automatically. You have no choice. Every single month, you're paying money towards that principal, you're building equity in the home, And so that's going to be really great for most of Americans who are not great at actually saving money. And this is a great lead into the next flaw in all of this math, and that's just that your equity and your debt can really fluctuate a lot. So if you look at an amortization schedule on a mortgage, this is just a breakdown of the amount of money that you spend each month on your principal versus your interest. It doesn't actually stay consistent all the way through your mortgage. And so in the beginning, most of your payment is just going towards interest, but slowly year over year, your payment shifts towards more of it going towards your principal and less of it going towards interest. So for that $500,000 home with a 6% interest rate, your first month, you're pretty much only spending $398 on your principal. But then 10 years later, you're spending $713 a month. And 20 years later, you're spending like $1,300 a month. Additionally, there can be some variances in the loan term. Like you don't have to get a 30-year loan, you can get a 15-year loan. So there's a lot of fluctuations in the type of loan that you can actually get as well. Plus, there's a good chance that over the course of 15 or 30 years, you might refinance. So 6% might not be the exact interest rate that you have over the entirety of the loan. And the last thing that I didn't talk about is just the benefits of being able to deduct mortgage interest from your taxes. This is definitely a really important factor when you're considering the results and outcomes of how much money that you're going to be spending to own a home. But the reason why I didn't go deep into that conversation for this video is just there's no one size fits all, and there's really just so much variance that I could probably make a whole video just about that. So in case you're just hearing all this and you're a little bit confused, let me just break down in a really straightforward way the pros of owning and the pros of renting a home. So the first pro of owning a home is that it forces you to save money. Every single month you are building more equity in your home. The second one is that you get the appreciation of your home. So on average, your home is going to go up 4.8% in value. The third one is that you get leverage when buying a home, meaning that you might buy a $500,000 home, but you only put $100,000 down. So if that home goes up about 5% or $25,000, you didn't actually get a 5% return, you got a 25% return on that $100,000 investment. You also get some more emotional pros as well. So you get stability when owning a home. You get stability in how much your housing costs actually go up. You get stability by staying in the same community. And there's a lot of benefits to all of that stability. And the last pro is that you get control. You can renovate, you can upgrade, you can customize, really you can do whatever you want, it's your home. Now in comparison with renting, you get flexibility. You can easily move to a new city, you can easily switch jobs, you can adjust your lifestyle super easily if you're renting a home. This is super ideal for single individuals. Now the second pro is that it's a significantly lower upfront cost. That's actually typically the reason why people stay renting instead of buying a home. The cost of actually renting and moving into a home is significantly less than having to come up with a down payment, closing costs, all of this stuff that's associated with moving into a home. The third pro is that you never have to worry about maintenance and repairs, which can be a real hassle if you're a homeowner. The fourth one is that you can invest the difference because more often than not, at least over the last 5 or 6 years, renting has been significantly cheaper than owning a home. And the last pro is just that you could potentially live in areas that you wouldn't be able to afford owning. Maybe you don't have $200,000 to put down on a home that's in the middle of downtown or by a beach, but maybe you can afford the rent payment to live in one of those areas. At the end of the day, deciding to buy or rent is definitely more than a math problem. But that being said, math is definitely an important part of the equation, and so hopefully this video helps shed some light on your decision of whether or not it's a better time for you to rent or buy right now. Now, if this video was helpful, it would mean the world to me if you could like, share, or even subscribe to this channel. That way I know to continue to make more content like this, and I can help get my word out to more people.